that should happen today. I'm slightly different possibly than some of the other presenters because I actually don't have products to sell. I mean, I kind of do, but that's not what this is about. I've got nothing here to sell you because what I offer is free. I've got a live trading room where I'm on camera and microphone, free to you, no credit cards are required. I put out videos every night. They're free to you, nothing's required. So you can hang out with me anytime you want and no credit card will come out of your pocket. So don't worry about that. But I would like to teach you a little something today if I can, or at least I'd like to answer the most important question that I've been asked in the past couple of weeks, especially in the past 5 days. So in the last webinar, about a month ago, there were some questions and I answered them for my Omniacs around the world. Well, I did a poll over the last few days and I didn't even have to do a poll, just listening. There's a lot of worried traders out there right now, a lot of worried traders that we are in for a market crash. So here's what I hope to do. I hope to answer that question. The most asked question of my Omniacs around the world this week is, Oscar, are we going to see a market crash? This presentation should answer that question. So we will try to answer that together. Now, as we know, analysis changes gears, and from one day to the next, anything's possible, right? News can come out of the woodwork that we're not ready for, and the landscape can change. Barring no changes in the landscape that are so major they're not already in the charts, which just about everything is, I should be able to answer that question today in today's session. So I don't know how many of you know me. My name is Oscar Carboni. I've been in this business since 1982, spent most of my life down on the trading floors in Chicago and Manhattan, and have been one of the foremost analysts to ever come out of Wall Street. I helped develop point and figure charts, get them onto computers and have bar charts, get that broadcast around the world. Then I was able to help exchanges go on the internet. So I've been part of this since way back when we used to do things with pencil and paper. And I'm pretty well entrenched and can read the charts really well. So let's see what I can come up with for you. So the videos, by the way, if you want to find those videos, every night I do a YouTube video or just about. In that video, it's geared to tell you what the markets will do the next day. So there are thousands and thousands of them, and there'll likely be another one this evening to tell you what should happen in the markets tomorrow. If you like those videos, you can come to livewithoscar.com. In fact, let's log out of it for a moment just to show you what it would look like. So you would go here to livewithoscar.com. And from there, you simply hit register. You fill out a few pieces of information, and the only thing that you'll have to watch out for is you'll get an email and it'll go to spam, most likely. Unspam it, respond to that email, and in just a moment, you will be logged in. You can click into the chat room, and boom, you will be in a live chat room that basically looks like this, but my cameras are always on, except for right now because I am using that camera to do my presentation. So if you like what you see, come to livewithoscar.com, come hang out with us. It's a live trading room. It should be called Live with Oscar because I just live my life through the markets with camera and mic on as much as possible, and my Omniacs around the world get to share in that. If you really like what you see, you can go to omnibootcamp.com and fill out an application so that you can work with me for 4 days in one of my Omni camps. Barring that, let's go to work. I hope many of you can make sound money making positions or take some positions based on this presentation. If you do like what you're about to see, make sure you join me in my free live trading room. Kids, let's go to work. So what are we looking at? We're going to look at a chart, do a little exercise on this chart. It's the same exercise I've been doing in my trading room for the past 3 or 4 days while the market is starting to crack. So you're looking at the daily YM or the Dow itself. This is the YM, the future of the Dow, watched by everybody in the world. The Dow is the Dow, right? Everyone watches the Dow. So I'm going to tell you right now that repetitive patterns are the cornerstones of technical analysis. If you do not understand that repetitive patterns are what this whole game is about, that in geometry, it's what the whole kit and caboodle is about. If you don't recognize that, watch this video. So, repetitive patterns, the cornerstones of technical analysis. What does that mean? Well, let's move this out of the way and take a look for ourselves. We are looking at the highest high the market has ever traded in its entire life. Since the beginning of the stock market, of the Dow, since Charles Dow created this, the highest it's ever traded in its life is 1, 2, 3, 4 sessions ago. 4. That is it, kids. 4 sessions ago, we were at the all-time forever high, and immediately the panic comes out. Oscar, this is it. Here it is, the big crash. Oh my God, we're 4 days away from the all-time forever high. Where does that panic come from? I've never seen anything like it, but that's what happens. I've got some guys in my trading room, and all they talk about is the downside, the downside, the downside, the downside. And let me ask you a question. How much downside do you see? How much downside do you see? So let's go over this chart. Here's a repetitive pattern. And here is why I am not calling the top in this market until it stops repeating. Because a repetitive pattern repeats until it stops repeating, then it's done. Repetitive pattern. All-time forever high gets made in the stock market right there. What's it do? It has a pullback. Another all-time high gets made. It has a pullback. While you're watching, watch this. Another all-time high, the forever high, it's never been higher. What does it do? It has a pullback. Then we make another forever high. It has a pullback. A new higher high. It has a pullback. A new higher high. It has a pullback. Another higher high. Now here we are. Another higher high. So it has a pullback. How on earth does that make 1,000 analysts out there say the top is in, that's it, it's over? And I say to myself, how do these people tell the market what it's going to do? Why don't they listen? How could they tell it what it's going to do? So it is not telling us the top is in. There is nothing here that would indicate that. So we've got what we call an Oscarism, known as an F flag. The market went around the F flag, popped out of it for 2 days, back to the bottom of it. There's no reason to call this panic yet. I mean, this does not look scary. I don't care who you listen to out there. If people have their own opinion, that opinion comes from a place of fear, a place of greed, a place of, I don't know if I have enough money to pay my alimony or child support or whatever is going on in their heads. That is also their opinion squashed in there. The chart removes all of that nonsense and shows you the truth. The truth at this point, as of today, is not a major top isn't yet. Now, another thing to think about when you're calling major tops, for you people out there that just love to call the top every time it goes down for 2 days, you must realize we have been rallying since 2009. Then COVID knocked us down for a short period, and we rallied out of that. Then we had Trump speak earlier this year in April, and we rallied out of that. 3 dips since 2009. All this does is go up. You know what I mean? Where is the opinion that we're in a bear market coming from? It's all over the street, by the way. Where is that bear market? Do you see it? I don't see it. Another thing that I like to do, simple, is if a market starts on the bottom left of my screen, right? Let's just make this a little thicker. If a market starts on the bottom left of my screen and heads all the way to the top right, I have never once in my life called this a bear market. Not once, not ever. It's never happened to me. Do you call that a bear market? Because if you do, you need to hang out with Uncle Oscar a little more. It's not bearish. It could turn bearish, but this panic I'm hearing on the street because the market made an all-time new high and now needs to pull back. It made an all-time new high and now wants to pull back. It made an all-time new high and now wants to pull back. Where is that panic? Where is the end of the world coming from? But we'll keep looking. Maybe it is the end of the world. Let's go look at more charts. Chart number 20 is what we like to call chart masterpiece. It's the NASDAQ weekly bar. Another repetitive pattern? Do markets actually trade in repetitive patterns, or is my 44 years totally wasted time? You tell me when we're done with this. What you're looking at, I can explain everything on this chart, but there's no need to. The only thing you need to know is the repetitive pattern and is it working? Okay, so what's the repetitive pattern in this chart? off the average, major rally. Holds the average, major rally. Holds the average, major rally. Gets through the average where? Just to the bottom of the channel. That's it. Major rally. Holds the average except for Trump decides to put out tariffs. We went down. And by the way, this is exactly where I put out my year-end call for 75.12. Had to do it on the downswing. And we got back above that average. Okay, so now we're right back in the repetitive pattern. Only had a quick mishap, back into the pattern. Makes an all-time forever new high. Rallies up, has a bit of a channel. What could happen? It comes down to the repetitive pattern average. All right, so markets have to fluctuate. They don't just go in one direction. There is nothing wrong with this market pulling back either to the green line or to the blue average like it always does. What's the worst that can happen? It could get to the bottom like it did here, So what? So what? That is not the top. That does not call a top. No, not in my opinion. Maybe it is, but I've been hearing this all week and I'm a little angry about it at this point. I can't believe how blind people are. Just they put their blinders on and then they just yap anything that comes to their mind. Oh, look, it's the top. I heard it on the news. I read it on the internet. Sell everything. You know what? Learn how to recharge, people. If you're going to give opinions to others out there, don't make them panic for no reason. Read the chart. Show them a chart reasoning why the top is in, what you cannot do right now. If you can, you're magical. So let's go look at another chart. Let's just keep testing this thing for, is the top in? All right. Monthly now. We did a daily NASDAQ, weekly NASDAQ, monthly NASDAQ. The monthly chart shows nothing more than a big old bull flag. Oh, it goes to the top, to the bottom. Is that the worst thing that could happen, that we have a pullback to the bottom of a bull flag? Is that a reason to go, oh my God, this is it. I knew Trump was going to run the economy. Everybody out. Is there a reason for that? When you look at that chart, I'm trying to calm the crowd down. The community needs to calm down. We're 4 days away from the all-time high. You cats need to cool out a little bit. I hope this video will help. This is a testament of the power of technical analysis. So one of the things you can do with the chart is way back here in November, we made a call while the NASDAQ was exploding. And we said by April 25th, we should hit 15,300. The market drops right after that call gets made and just just about hits 15,300 and explodes. I mean, come on now. You can't do that with a crystal ball. You can't conjure that up. And you can't call Uncle Bill and have him give you those numbers. The charts are the Bible. They will always tell you what's going to come next. So my call was for the bottom of this green line here. It actually got there. I missed it by that much. Is that not insanity? That's what the power of technical analysis is. And if you listen to anything other than these charts, you're listening to pure opinion. The charts are pure dynamite. They will always tell you the future movement if you read them correctly. So far, I cannot call this a top. The other thing is we've been booming, as I mentioned, since 2009. When a market moves up that far, it capitulates when it comes to an end. It doesn't just put a few bars in, you know what I'm saying? You get an event, and the market came to an end. There's been no event. Stop calling tops, people, until they call themselves. All right, what else is out there? Let me see if I can make this even clearer. 24, I think that's another chart I had played with earlier this morning. Yes, it is. So, you know what? Let's not go there yet. I'll bring that up next. Let's go here. Let's stay with the indices. Is the 7512 Omni call still valid? Well, hey, anything's possible, right? We got a couple of weeks left before we get to the end of the year. Anything can happen, but forget the exact number of 7512. Is the market crashing? That's what this is about. Is this another repetitive pattern? Well, I don't know. What would you call this? You tell me. Makes a new high, drops to the average. Makes a new high, drops to the average. Runs up again, drops to the average. Makes a new high, drops to the average. Runs up, drops to the average, but then Trump does his tariff call. Boom. At 48.32, the Omni call for 75.12 comes out right down here at the lows. Bingo, 75-12 call. What happens? Exactly what we'd expect so far, but we'll get there. So we get under the average, boom. Right after that, we get back above the average and we go right into a channel, test the average, run back up. We're testing the average again and the channel. So far, there is nothing there calling top. There is nothing there to scare the crap out of you. There is no reason to not think we get above 7,000 before this year is over. God knows we get 75-12. Boy, would I be good. Huh? We'll see. I can't make markets go anywhere. I can only control how we behave inside the volatility, but I can't tell markets where they're going to go. I do a good job listening, though. So listening to this, unless we break this, and then we break these lows, and then we break these lows, we're not in a bear market. You know what I'm saying? We're miles and miles and miles and miles from a bear market. So stop calling this bearish, people. Learn how to read charts. What's next out there? Let's stay with this. Transportation average. The Dow Jones Transportation Average, another one of the indices that everyone's calling the downside on lately because they don't believe in charts. They believe in their opinions. Much, much stronger than Wall Street, proof, what you see before your eyes, and the truth. Opinions are much stronger than all that combined together. Opinions are bad. Anyway, the opinion out there that this market is crashing. I showed this chart several weeks ago in my last webinar, in fact, and I said there's something called a triple top. Now, triple tops are known in just about any book you're ever going to read as the top. It's the end all be all. It's over. The top is in. Sell the farm. Goodbye. It's over. But then I started looking at head and shoulders, and I started looking at double tops, and I started looking at triple tops way back in the 80s. And I would go in the pit, and I would test those theories 400, 500, 600 times a day, 1,500 times a week, 5,000 times a month, 6 months in a row. Way more than any of the people who wrote those books ever had a chance to try out their theories. And I promise you, most of it is hogwash that I've read in books. They just don't get it. They're very good at reading books. They're very good at filling chapters of information and quite the jargon there to make you realize just how great they are. And their indicator is, I find most of the stuff I've read in my life doesn't actually apply to what happens in the charts. For instance, the end all be all, the triple top is the top. Oscarism version, I've been saying this since 1987. The triple top is not known as a triple top. It is something that will put in top one, top two, you'll get top three, you will get a brief pullback, the brief dip, and you will run up to new highs. What did we get? We got a pullback, which is a brief dip. We ran up and made new highs. Now we're in a bull flag, getting ready to possibly break out of that bull flag. And half the people I speak to are ultimately bearish. This is to convince you that you shouldn't be bearish until the chart tells you to become bearish. That could start on Monday, but that's not what we're seeing today. Let's continue on. Now we'll go to that crude chart because that popped up before and there's a reason for it. This is crude oil. Did you know that crude, when it gets cheaper, is a worldwide stimulus? Not only is it a stimulus, it goes right in your pocket immediately unless you own nothing but Teslas. It is, in fact, if you own a Tesla, electricity gets cheaper when crude gets cheaper because they use crude sometimes to create the electricity, as crazy as that sounds. So let's just go back to charts. Crude oil is a worldwide stimulus when it goes down, and it is absolutely the most treacherous thing on the planet when it goes up. But when it goes down, every company on this planet, everything that transports anything, every one of us who drive or have houses, it makes life cheaper, just like that. It's a worldwide stimulus. Now, another thing that when crude does go down, giving that worldwide stimulus, it pushes markets up. Well, this is crude oil. And I don't know, maybe some of the crazies that are calling the top of the market right now are going to call this a bull market when they look at it because it goes up and then drops. It goes up and drops, and it goes up and drops, and it goes up, drops. Maybe those nuts think this is bullish and the stock market's bearish. Let them do their thing. I'll explain to you what's actually happening. Crude going down, when crude goes down, that worldwide stimulus helps to buoy markets. The price of crude is not just going down, it's starting to go down quickly. And not only are you getting out of the bottom of this major wedge, and it failed every time it got to this average on the way up, failure, 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 gets through the support, starts here, goes here, support. Not only are we through the support, guess what else we're about to hit? A double bottom. And I'll promise you right now, there are sell stops waiting below this double bottom because that's how this thing works. Why? Because when you hit here and it went back up, all the stops in the world were put here and they're still being held by long-term fund managers. Well, guess what happens when we get back here? More stops will get added and we'll bounce just like you see. And then we will take out those stops because the market always goes to the most work in the book. The book being upside orders, downside orders. If there's more volume on the downside, the market will take out those orders first. I promise you there's a lot of stops under this red line right here, and crude is going to take those out. It's already proven it wants to go there, and it might not be tomorrow, but we will take out the stops under this double bottom because that's what crude does. Seeks the most volume. Now, of course, there could be some weapon that goes off and crude can go crazy tomorrow. If it just sticks to its chart patterns, which I am a chart reader. I don't read the future. I read the charts, which kind of tell me future market pricing. But I can't tell you what news is going to come out. I mean, that would be a crazy person, right? That can predict news before it happens, or a medium. But I can predict market movement that's shown to me off the chart. We will take out those stops. You know, it did it earlier, by the way. You had one here, double bottom, went up, then took out the stops. Right? It's just what happened here. Now we have a deeper double bottom. It might go up, but you will take out those stops, and that will help the rest of the world with cheaper crude, worldwide stimulus. Also, a reason to think the market should not crash, the stock market. What else is out there? Let's go look at another chart now. These are your 30-year T-bonds. Now, I don't know if you know this or not, but inherently, when 30-year bonds move in the down direction, rates go up. When 30-year bonds move in the up direction, rates go down. Jerome Powell does not have to say a word. The market will just correct itself and rates will go up when the market goes down, 30-year T-bonds. And when they go up, the rate goes down. When the bonds go down, the rate goes up. When the bonds go up, interest rates go down. So overall, we have been going up, but lately, this is a weekly now. So every one of these bars is 5 days, 1 week, 2 weeks, 3 weeks, a month, 1 week, 2 weeks, 3 weeks, 2 months. We've been going down for 2 months and a week. That's a long time. So we have been going down. That's actually putting pressure on the stock market. But it is the only outlier I have found in all the work I did before this presentation. The only thing I found that's not working to push the markets higher overall are bonds. And if you want to look long-term, they actually are working long-term towards the upside, just not in the last few weeks. And we are shorter-term minded traders in this world usually, right? Unless you're running a long-term fund, we're shorter-term outlook traders. That has been interest rates being moved up, which is not the best thing for the stock market, but not dramatically. And you know, there is a fundamental. We heard it last night. The president of the United States came on TV and said, the next guy I install in the Fed's going to lower rates a lot. I don't know that he can force a Fed to do that, but that's what we heard. If that's the case, bonds should go up, and that should help the stock market. So that's the only outlier I have found, but there are some other markets I thought we should go over together. One of them is silver. Now, I don't know how many of you know me and how well you follow my calls and how often you've actually watched, but when I was in Australia a month or so ago, some clown came out and called the top in silver the all-time high. Here it is, the top's in silver. And I literally had to rush to the camera and do a video and say, listen, if you believe in these entities on YouTube and on social networking that are calling the highs in silver, don't listen to them. They don't understand how this works. It couldn't be the high. I promise. I said it once again. Let Uncle Oscar tell you when highs come in. Why? I grew up in gold and silver. I started there at 18 when I was a child. I know those markets well enough to kind of not call tops and bottoms unless they call themselves. Anyway, this really big entity comes out online and starts saying the top is in silver. And my videos were, do not listen to him. The top's not in. I'll let you know when that top comes in. So we were able to convince people that the top was not in yet, and they did not get short until we made a call for interim top that actually worked. And we came all the way down. I mean, we came down a lot from 58 to 50, but we're not topping in silver yet. You know what I mean? Look at this channel. First, it worked its way in this channel, which is a pretty steep channel, but then it just, I mean, come on, look at that. There's no top call there yet. Well, silver looks good. Metals themselves, insanity. Look at this. Look at this gold move. Now, gold is a creature of the channel formation. It's just what it likes. Gold loves the channel formation. In fact, Omni gave us a buy in gold down here today, and it went all the way up there where we got out and made thousands and thousands of dollars in gold today. Actually took back our silver loss from Monday. Thank you, gold. We appreciate that. So, gold, daily. It's a creature of channels. What would make me say that? And you know what? I have eyes. And so do you guys, right? You can see that. It runs in channels, even little baby channels, but major channels, it just runs in channels. Then it starts to explode a little, comes back down, and just creates another one. Gold loves to stay in channels. Now look at the latest channel that's been created. Look at this one. Gold is a creature of channels. Why? Who cares why? I don't look to reinvent wheels. It's put them on my car, make them go round and round. Gold and its channel creature habit formation is another wheel for me. And I use it to go round and round, but you'll see that gold likes to get itself into channels. And there are actually smaller channels inside the bigger channels, so gold likes to do that. One of the few markets that just likes to be symmetrical. Gold is one of them. In fact, what we had here was a bull flag right before. And then the market went up and created this other flag that you now see. So that was a bull flag, right? Continued up, stayed inside the channel, inside the bull flag. And now it created this pennant flag, and it's starting to break out of that. And just watch gold inside these channels. Gets out of one channel, drops to the other, usually holds. Hope these things help you if you draw up these charts for yourselves. What else? Oh, look, talk about gold. Watch this guy. If you're not metals traders, look at what's going on out there, kids. This is your platinum daily bar. Talk about a massive channel that was in, but look at the channel it's in now. This was a massive channel, right? Massive channel that it stayed in. But look at what it's doing now. Acceleration time. When did it accelerate? Remember this. After a flag was made, then we accelerated. You could call that flag either this, or we can move that around and call it this. Either way, that was a bull flag, and you had your explosion afterwards. The metals are behaving as, here's what I'm seeing. Fund managers are buying gold for a week or so, then they come in and they buy silver for the silver gold ratio. They actually have the silver gold ratio at 2.2 right now, which is an amazing ratio. The platinum gold ratio. We're doing platinum. The platinum gold ratio is like a 2.1 or a 2.2, which I've never seen that in my entire life. And I grew up in the platinum, gold, silver, and copper pit. You know what I mean? This is insane what's going on here. But you can't stop what's happening, and you shouldn't fight what's happening. Metals are all running. Silver, gold, platinum. Hey, by the way, join me each day at livewithoscar.com. Cost you zero, not even a credit card, and you can hang out with me in my live trading rooms. But let's just keep looking. That was your platinum, right? Look at this. Look at the palladium. My God. Look at this palladium. A huge cup. Maybe a handle being built. I don't know. I figured maybe it wants to stop now for a handle. My goodness, the metals are just going gangbusters here. Get yourselves long on dips. It's not going to stop tomorrow. And then what else do we have? Copper. Look at this crazy copper run. Now, copper is getting involved, right? The other metals went without copper. Why? Because there was a lot of tariff talk back here. This big drop, it's all tariff talk right here. Then the tariffs were taken off, and boom, now copper is joining the parade. And I don't know exactly what this is here, but it's some kind of flag-ish looking formation. Right? It's something going on right here. I don't know exactly what it is, but it's trying to speak right now. It's telling us probably wants to go higher. So the metals are just gangbusters moving higher. But there is this. You've had gold move from $275 in 1982. You've had it move all the way to 4,000 and change, 4,300. Platinum didn't go, silver didn't go, copper didn't go, palladium didn't go. They are now playing catch up. Their ratios, gold, silver, gold, platinum, gold, copper, platinum, gold, they're all silver, gold, they're all pulling in their ratios, meaning gold has gotten so expensive now at this point, the ratios are out of line and they're buying the other metals to catch up with the gold ratio. Now, funds have been holding a lot of these metals for many, many decades. That ratio makes a big difference to them. It stays in line if they can keep it in line. I see that that's what's happening here. They're buying the outlier metals in order to get the gold / whatever metal price to come more in line with where it belongs. Now, this is an absolute true thing because I did this, I think, in my last webinar too, but it's worth showing you again. Back in 1982, maybe 83, when I started in the silver gold pits, I put a silver coin and a gold Krugerrand in my pocket. I promise you, this was worth about $265, and this was trading around $21. In my 44 years, this went to $4,300, and silver up until the last 6 months was still at $20, $21, $22. It never did anything. Copper was 65 cents. Gold went from $265 when copper was 65 cents to 4,300. Platinum used to be worth more than gold. Now it takes 2 platinums to equal 1 gold. They all need to catch up to the price of gold. And that's what's been happening lately in your precious metals, if you wanted to know what's going on there. What else did I have for you cats? Let's move out to some crypto. Bitcoin. So what has Bitcoin done? Bitcoin amazingly went all the way up to the Omni 126,000 target like it was scripted. And you guys know that's been my target all year, right? Hits the target and just falls apart. But then we call for 80,200 and it goes to 80,400 right here. Put in a bear flag, broke down out of the bear flag, and I would think more downside coming for this guy. However, if you remember, I've been saying this for the last month or so, that my calculations are such that come towards the 3rd week of December, maybe 1st week in Jan, right around there, my calculations are that the end of crypto winter should come our way. Crypto winter starts with Bitcoin. Nothing else goes into a crypto winter, just Bitcoin. It takes everything else with it. Bitcoin is the leader of all the other cryptos, as you know, but it doesn't always move the other cryptos. It's more of a leader of Ethereum and Solana than it is any like smaller coins. But the major ones out there, Solana, Ethereum, Bitcoin. Bitcoin is your leader, and your leader says, we still got more downside. Hopefully my calculations are right. Everyone's got their own way of calling crypto winters. Hopefully my Bitcoin winter does end before this year ends, or maybe in the 1st week of next year. Would be good because I own a lot of it. What else is there? 15 is another chart for us to look at. Ethereum traders. Last time I showed this chart, none of these bars existed. We were right here. And I called it a do or die level. Traders, we're at a do or die level. If it gets above, fantastic. If it doesn't, we're going to die. Well, it got above. It did. It didn't die. It literally got above. Thank goodness, because that's not usual. Right? Lately, you ain't no getting above that channel, but it gets above. Stays out, starts to test the channel, and here we are now. We're literally testing. If it settles down here, well, then we failed at the do or die area. You never know. Let it do its thing. I'm considering or assuming, we don't like assuming, but in this case we have to, that if Bitcoin has more winter left, so does Ethereum, right? Being that leads Ethereum around, so you'd have to think Ethereum's going to head back into this channel, but we'll play this one day at a time. We'll know by the end of this week. Then we can roll out to something that I will have to thank each and every one of my Omniacs for. If I could find it, I'll show it to you, and that is the Omni trading token. Omniacs, I love you guys. Look at what you've done with your community, my community. I back you guys 1,000%. I am there to help you. But we have had success in our Omni trading token. It is now sitting in a bull flag. In fact, let me see if I can show that in a better way. Same token, we've got two bull flags. You got a big one and a little one. So there's a little one inside the bigger one. We have two bull flags. Now, I just showed you a bunch of charts where you've seen the bull flag. Once you get out of a bull flag, generally you have a breakout. Congratulations, OmniX. So far, so good on our Omni token. We had this bull flag, it broke out. We had that bull flag, it broke out, exploded. Another bull flag above the average so far, most of it. I say we just keep doing our thing, OmniX. You're doing great with this token. I promise I will be there to support you. But bravo on the work we've all done with our Omni token. And then that brings me to a gift I would like to give you. That gift is here. Tesla. How many traders out there trade Tesla? Love it, hate it, does not matter to me. I love the company. I think Musk is a great man, but I only look at charts. We have a double top, and we know the old adage, when we see a double top, we sell a double top. Now, you've got a top here, and it went all the way over here to put in the second top. The likelihood is that will be a double top, but here is how I would ask you to handle this. The daily bar right now is still under that double top, today's daily bar. If we drop down and have a daily bar that drops lower and settles by the low of the daily bar, you could basically call your double top in place. I wouldn't just blindly sell this because you might rally above it and then it wasn't the double top, right? We don't give anything a name till it names itself. This looks like a double top. I think it's a double top. I won't name it for sure and trade it until it proves that to me. How will it prove it? Well, it simply just needs to drop down a little bit. If it drops down, well, let me fix that trend line because there is no way it's going to let me play with it in this fashion. That should be on none. Sorry about that, kids. Let's make it a little thicker, being that we're here. All right. So if you get this and a settlement somewhere down here, settlement, if you don't know, that's a dash to the right, when it's the close, like every other, then you can call your double top. So my gift to you is watch, because this is a monster move. If it goes, it's going. Where would it go? Well, if you ask me, if Tesla drops, it already told us where it's going to go. It's going to go right there. Why? Because that's it. That's the bottom for Tesla, the entire run. That is the bottom if you get there. So maybe it could go there. That'd be a nice fat run, right? 410, 409. We'll take it. So I wanted to show you that. It is sort of my gift to you. It's your setup. Keep your eyes on it. You get that bar down, you can go short. If it gets above, all bets are off on the double top. Traders, that's my presentation for you today. I really hope this helps. I hope this helps you see what's probably happening out there versus what people say when they just belt out an opinion, all based on their heart pounding too much. That opinion I just showed you is 100% chart based, has nothing to do with a bias in any direction. Traders, that's my presentation to you. The last thing I'd like to say is stops are in. Emotions are out. That is the truth. Put those stops in. Keep your emotions out. Rock and roll, traders. Thank you all for tuning in. With that, Traders Corner, I yield you back my time.